We use digital money every single day, right? Tapping our phones, clicking buy now, sending cash to a friend, it all just feels so seamless, almost like magic. But what's actually going on behind the scenes? Well, behind that smooth experience, there's this complex, invisible world of financial systems, and we're about to pull back the curtain on it.
Seriously? Have you ever thought about it? When you buy a coffee or pay a bill online, what journey does your money actually take? It's not just one single path. It's actually a whole network of different systems. We're going to peel it all back, see how those systems work, and then we're going to explore a powerful new alternative that's really changing the game.
All right, to really get a handle on this, let's follow someone. We'll call her Jane, through a pretty typical day. Her totally normal, everyday transactions are going to help us map out that invisible infrastructure that powers our whole digital economy.
Okay, so first up, 7:30 a.m., she's grabbing coffee with Apple Pay. That's running on the good old MasterCard credit card network. A little later, her friend pays her back for lunch using Venmo. Now that's a totally different system. It's what you'd call a closed loop, where the money just moves between accounts on Venmo's own internal books. Then, to pay rent, she uses her bank's bill pay feature. That's running on yet another system called the ACH network, which is built for these big batches of payments between banks. And finally, for a little online shopping, she's right back on the card network. So think about that. 4 payments, 3 completely different payment rails.
And this really shows us what's going on. Our daily financial life is this patchwork of different systems. And honestly, here at home for domestic payments, it works incredibly well. It's fast, it's reliable, we barely even have to think about it.
But what happens when that payment isn't local? What if Jane needs to send money to a family member halfway across the world? All of a sudden, that smooth, seamless experience just breaks down, and all the hidden friction in the system becomes painfully obvious.
And this gets us to the heart of the problem. The traditional way we send money across borders is, frankly, completely outdated. It was built for a different time, and it is just full of these hidden roadblocks.
So why is it such a headache? Well, for one, it's incredibly slow. A payment can be stuck in limbo for up to 5 business days before it actually settles. It's also super expensive because every single bank in the chain takes a little cut. And you can't even track your money in real time. It just disappears into this black box. On top of all that, it's all limited to banking hours, so good luck sending money urgently on a weekend.
Now, all these frustrations created a massive incentive for someone to come up with a better way. And the result is a totally new kind of payment rail, built on a technology designed specifically to solve these problems, the stablecoin.
So what is a stablecoin? It's actually pretty simple. It's a digital currency, a type of crypto, but, and this is the key difference, its value is pegged to a stable asset, like the US dollar. This is designed to get rid of those wild price swings you see with other cryptocurrencies, which makes it, actually practical for payments. What this really means is that stablecoins are trying to give us the best of both worlds. You get the price stability of a dollar that's in your bank account, but you combine it with the power of a global blockchain network that is always on, 24/7. Now, this isn't just a small upgrade. We're talking about a fundamental rethinking of the entire financial architecture. The real magic, the core innovation, is in how the transaction itself is processed.
Okay, here's the absolute key difference. In the old system, the message to send money and the money itself move separately. It's like sending an email saying, hey, a package is coming, and then shipping the package later. With a blockchain, the message and the money are locked together. They move as one single, inseparable thing. The instruction is the settlement. This is called atomic settlement, and it's the innovation that makes everything else possible.
And that one single change in the architecture unlocks all these incredible benefits. Transaction speed goes from days to just seconds. Costs plummet because you're cutting out all those middlemen. The network is always on, 24/7, weekends, holidays, you name it. And maybe most importantly, it opens up global financial access to anyone with an internet connection, which is a huge, huge leap for financial inclusion.
All right, so let's put it all together now. A side-by-side comparison really just hammers home how different these two worlds are.
I mean, the contrast is just stark. Instead of a long chain of multiple banks, you've got a direct peer-to-peer network. Instead of waiting for days, settlement happens in minutes. The system goes from being open 9 to 5 to being on 24/7, 365. High, unpredictable fees get replaced by low, predictable network costs, and the whole process goes from being a mysterious black box to a transparent public ledger. On literally every single metric, it's a revolutionary improvement.
And that's really the bottom line. It all comes back to that one core idea.
That architectural leap from separated instructions to a unified atomic settlement, that's the engine driving every single one of these incredible improvements.
So this leaves us with a really fascinating question. We started with Jane's simple, everyday local payments, which already feel pretty instant to us. But could this new architecture, the one designed to fix global payments, eventually loop all the way back around and make all of our transactions, from paying rent to buying a coffee, truly, atomically, instantaneous? That's the future this technology is pointing us toward.